What's going on, guys? Welcome back to the channel. Today we're taking a look at Apple stock. We're going to take a look at a bullish pennant, which is a bullish formation, and then a breakout, and then a trade that we made on this setup. I want to walk you guys through it because it was a really good trade, and also because it can help you identify when a setup might be better than others, or when you might expect a trade can work better than other trades, right? So rather than me spiel on, let me just get into showing you what I mean. So yesterday, we made a trade here on Apple, and I'll point it all out. So we had this great looking bullish pennant here that ends up breaking out. So many times you might come across a setup that looks very similar to this. Let me draw it out again in the yellow. Or you might find a setup that looks very similar to that, and then it ends up not breaking out, or you get in a trade and then it doesn't really work out so well. Might leave you kind of scratching your head thinking, why didn't it work out so well? And I'm going to kind of point a couple things out. So though this was a great setup on the intraday chart, why is it that maybe it had some good follow through or that the breakout actually worked? So if we take a look at the daily chart, you will notice, well, actually, let's do a 3-year chart. You'll notice that currently Apple is into a new all-time high. So even, taking a look at the daily chart, you'd be able to see that there really isn't any resistance on the stock. Okay, it's just kind of breaking into new highs. There's no price point or previous price action resistance. So then when we're looking at it intraday yesterday, let me go over there. So when we're looking at intraday yesterday, why is it that I would want to take a trade here? And I'll put the trade on for you. Let's pull it up. Okay, let me shrink this down a little bit maybe. All right, so we're looking at Apple. So to walk you guys through this, we come across Apple has an explosive move in the morning. Didn't catch any of that move. Just because you don't catch this move doesn't mean that there won't be another move or another predictable move that you can take or trade to make some money. So we come across Apple in the morning, spiking up. We kind of missed that. Too late to jump in on it. So we don't chase it up. We just wait for it to form into a pattern that looks predictable and that we could trade, which is this nice bullish pennant. So you can see here, ended up getting long 400 shares on that candle. Pops up, sell 200, sold another 100, then I sold 50, and then I held 50 shares overnight, which didn't really result in me making pretty much any more money. All right, so to walk you guys through this, think about it. We wake up in the morning, market opens, Apple goes on a rip, pulls back, bounces back up, pulls back, puts in a higher low, bounces back up, hits resistance, comes back down, puts in another higher low, bounces back up to resistance, pulls back, puts in a higher low, goes back up to resistance, and it holds, okay? So that's kind of the pattern. That's the formation, right? So if you understand the buying and the selling of a stock, you have resistance, resistance, where you see it keep getting knocked down, resistance. But each time it's starting to trend higher and higher towards that resistance until eventually it holds right at it, getting ready for a breakout. And you can see this massive volume spike that comes in just as the stock starts to break out. So this is a situation where you might see something moving really aggressive and you miss it, but it's okay because you can sit back and wait. In something like this, look at the move Apple made, and it had a decent pullback. It didn't crash, it just held. Bounced back up, held. Bounced back up, held. Held right at highs, ready for the breakout, and that's where we make the trade. So this is a simple go-to bullish pennant breakout trade. Now, a situation where this might not have worked would be if, for example, the stock was hitting a previous resistance. So imagine this being a daily resistance, whereas this isn't into an all-time high. Imagine if this setup started to occur, but it's at a previous resistance top. A good example of this might be something like NVIDIA. Okay? Like this. All right, you can see NVIDIA had previous resistance right here. Okay? And if you go look back at the chart, it definitely isn't into an all-time high. Still has some more previous resistance. So when you come in and look at it today, you might go, okay, we have this big spike, right? Look at the big spike in the morning, similar to Apple. except this gave back all the gains and it's losing that bullish formation. So what I'm getting at is you might see these bullish patterns form and look like they're getting ready to break out, but come to find, if you look back a little bit further on the chart, you'll see that there might be some resistance that the stock is soon to run into. So if you were to buy that breakout, you're really just buying a breakout into more resistance. Whereas in Apple's case, you're buying a breakout into all-time highs where there is no resistance. There's a good chance you're going to have some follow-through. So I just want to come out, make that video, and kind of share my experience on it, and hopefully that helps you guys learn a little bit more about trading, and hopefully you can use this to the best of your knowledge and then maybe make some money using that same type of setup and same type of methodology. So I hope you guys like the video. Thanks again for tuning in, and I'll see you on the next one.